Hello,
And
everyone, and welcome to another edition of the Smart and Safe Small Business Podcast. I am here with the head of taxation, Chris Mailer from DigiTax PRO. Thank you so much for joining us today, Chris.
glad to be here. Thanks for inviting me.
And we are talking about a very exciting topic, multi-state income tax. I know everyone's been waiting all day to hear about it. I'm kidding. Probably just as exciting as sales tax, but it is important for small businesses because it can bite them in the rear if they're not paying attention. So, before we get going, Chris, tell us a little bit about DigiTax Pro and who your ideal client is. Who do you guys work with?
Sure. DigiTax Pro is a sister company to the Bottom Line CPA, and some of you may be familiar with them. They are profit hero people, profit first people, and do some of the best work with e-commerce clients out there in terms of consultation, bookkeeping, and general guidance. So our ideal client would be that e-commerce business that's either solopreneur or team-based, say 1 to 3 team members probably, revenue stream anywhere up to about $2 million, depending on the mix. Could be higher. 1 to 3 revenue streams or channels. Uh, Prefer you to be 100% virtual in your work. And we presently don't work with clients that are heavily into crypto or um, uh, are doing their own warehousing. So
Interesting. I didn't know that. I guess cryptocurrency makes things complicated, huh?
it does. We've done a few, and those folks are doing really well right now. But it's a very difficult subject, and if you mix it into your business, it becomes a very complex subject that we're there's just better people out there equipped to help those folks than we are at present.
All right. So you guys focus on growing e-commerce businesses, and I know one of the issues that e-commerce companies have to be concerned with is multi-state income tax. So, in your words, what is multi-state income tax, and why should these e-commerce companies be paying attention to it?
Well, let's start with the second part of that. You need to pay attention to it because if you are selling in more than your own home state, you have a potential of running into multi-state income tax issues. States are strapped for revenues, and with all of the things going on in this world the past year or so, their needs are ever greater. So you see them very hungry for revenues and looking to get wherever they can. So if you are selling, especially if you're selling through multiple channel or through third-party channels, you could have multi-state income tax issues. And the states, if you think the IRS can be jackbooted thugs, the state people, their collections folks, put the IRS to shame. We'll
They
just
will
say
just go to the bank and say, "Give me my money," and just pull it from your account. It's happened.
they will slap a lien on your accounts faster than you can say no.
They don't even send you a love letter like the IRS, huh?
They don't. The IRS has a lot of congressional mandated restrictions to keep them at bay a bit, but make them behave. But the states don't have that, and they don't. Some states, we won't name them like California, but some states are more aggressive than others and a bigger headache than others. But it is something to be aware of. You don't want to run afoul of them because it can cause you problems. And they're very quick, like I said, to slap liens on things, but also to slap big penalties and interest charges on you as well, which we don't want. So it's something to be aware of.
So help me understand, when's the right time for a business to begin thinking about if they might have income tax obligations outside of their home state? Is this something that I would need to worry about if I'm just starting my business? Should I wait till I'm a certain size? I mean, what should the trigger be for typical business?
If you have engaged Alex to manage sales taxes in multiple states, there's your sign. You need to consider it. Now, do note this: there is a federal rule that does help you in this regard. It's Federal Rule 86-272. And it says that if all you do is sell into another state from your state and you don't establish a presence there, like a salesperson that lives there, travels there, you don't service product or equipment in that state, you don't use warehouses, your product only goes from outside that state into the end user, and all you do is market to them, then they cannot tax you for income tax purposes. You're still fair game for sales taxes always, but for income taxes, no. But if you engage a third party such as Amazon Fulfillment and your product flows through their warehouses and they flow through a warehouse in a particular state, that's established nexus, even if it's just in and out in the blink of a computer blip. You've established it and they've got taxability on you for all your sales in that state. So uh, the quick answer to that question, Alex, is as soon as you start selling outside your home state, start looking at it. But the minute you engage a third party of any sort for warehousing, for sales, for product maintenance or what have you, uh, then you better be prepared because the states are going to look at it. Now, one other thing, there are states that will, if you register for sales tax in that state, even though you may not have an income tax nexus, they will assume you do, and they'll sign you up for income taxes, and you have to, or sometimes they call them state franchise taxes, but either one, you're going to have to prove to them, no, I don't have that nexus there because I don't do anything but sell from outside the state into it. But they put the burden of proof on you, and
Yes, they do.
that's the power of the state. The state's on you there, so
Kentucky
that's what you
does
need to
that.
worry about it at all times, and beware when those letters come. You either need to deal with them or contact us and let us help you deal with that and guide you through that.
And I think what a lot of people don't realize when they are registering for sales tax permits through themselves or with another team that might not be as knowledgeable as tax valet is that these states are creating income tax accounts left and right. At tax valet, we sort of know the hidden workflow so that we aren't registering for income tax accounts automatically, but most people don't realize it. So if your business has been getting sales tax permits because of Wayfair, you had an intern or an admin assistant or secretary processing those permit registrations for you, just be on the lookout if you are getting letters reminding you of your income tax obligation. Do not ignore that because they are going to be expecting something to be submitted, even if it's a $0 filing. So,
Absolutely.
Chris, what's one free action that e-commerce businesses can put in place today that can help them as they think through their multi-state income tax obligations?
I would certainly get a state by state listing of my sales for the year and go through that. And if I am using any third party services for any reason whatsoever, like we said, for warehousing, for sales, for maintenance, repairs, or replacement, then I need to flag those states and beware that I may or may not have a liability there. If you find that you do, or you fear that you do, we do have a service we offer to our clients to look at that and give you an estimate of what your liability state by state would be, and then make some informed decisions. Now, I, I advise you not to take it on individually unless you've just got loads of free time and you want to become a tax accountant. Because it's the same thing, the same reason you use Alex and Tax Valet. It's just an overwhelming load of work because every state has different rules. They have different sales thresholds and ways they calculate it. Some some tax the business regardless of the type of business. Some pass the income on to a personal return required to be taxed there. Some require withholding on the partners or shareholders in an S corp. Some don't. I mean, it's just all over the board. And then there are some blissful, blessed states that don't tax you, and we love them. But so it's just everywhere. And rather than spend all your time learning all that, engage us or someone who works with that sort of thing to steer you through that and keep you on the fair side of the law.
Absolutely. And as a business owner who does have income tax nexus in multiple states, I can vouch for the fact that it is a nightmare going through all of this. And we go through it every year because we're a remote business. Well, how should listeners get in contact with you, Chris, and with DigiTax Pro if they're interested in that analysis or learning more about how you guys work?
Well, you could either send an email to tax@digitaxpro.com or send, I think you can hit a link on your website as well, I believe, Alex. Can they not?
That's right. We're going to include a link to your website in this
Yeah.
video and also on the blog post. We've got our 2021 multi-state income tax recommendation page, and we'll be featuring this video there.
Okay. Well, I just wish everybody well with it and pay as few taxes as legally possible.
As few taxes as legally possible, but as much as you need to, because that means your business is growing, right?
Absolutely. Absolutely. We hope you have huge tax bills to pay because you've become the next Elon Musk or Jeff Bezos.
That's what I say, man. All right, Chris, nice catching up with you. We'll talk to you
Same
soon.
here, Alex. Thanks. See you.